Can everybody hear me now? Let me get a thumbs up if I got sound. Great. Fantastic. Okay. All right. So I guess I'm doing a live stream now. I have not done this before, if that wasn't obvious. I have an outrageous amount of audio issues, all kinds of problems, all kinds of technical problems, but we'll work it out. Okay. All right. So I guess the first thing to do would be to address the fears that no doubt everybody is feeling right now. Um, I predicted exactly this level though. Progenity fell down to $3.20 and bounced exactly off of it. So yeah, I know everybody is really upset by the price action. It's not fun to deal with this kind of thing, but this is kind of how these algorithms work. And I've been talking about this with Jason and also on Twitter about algorithmic trading. And consistently, what I've noticed since I got into technical trading and watching all these patterns play out over time is well, these things do happen in cycles. Now, I don't necessarily subscribe to Sam, that guy Astro's cycle theory, but I do agree that algorithms work in patterns and they are rather consistent. And I also understand that they prey on human psychology and fear. So I guess the thing to take notice of is that these, despite all of the downtrend and all of the negative news that everybody's throwing out left and right about dilution, which dilution's not great for a squeeze, of course. You're annoyed by it. And yes, shorts did cover, but I have a theory about that as well. Um, and by the way, not all of the shorts covered. So let me see if I can pull up Ortex over here. We'll do a little bit of a lesson on reading uh, reading Ortex data. Let's see. There we go. All right, so you guys should be able to see my Ortex now. Oh, hold on. I'm not showing off passwords and emails. We're not doing that. Oh, great. Come on, Ortex. There we go. Okay, now you guys can see what's going on. All right. So let's check out the short interest for Progenity, and let's look at where we're at. Okay. So I don't look at the exchange reported short interest because it's just not fast enough. I always look at the estimated short interest, which is usually pretty close. I want everybody to pay attention to two levels here. Okay. Uh, Vortex. I need this trend line, please, please, and thank you. All right. So I want everybody to pay attention to the price where these levels escalated and where they dropped out at. Okay. Let's try right about here. Okay. So this is the entry point for where the shorts really started to get out of hand. And we went from, let's see, our price starting on this day when the shorts just started to jump into their positions at the highest was a buck 58. And 4 days later, uh, by Wednesday of the next trading week, the price had hit a high of 153. Okay. So this is the cost basis for, I'd say, about 60% of the shorts that had gotten into their positions. Okay. Short interest was pretty high, it was pretty significant, but it went straight through the atmosphere in the span of a week. And the price only fell by about 10 cents on average. Like not really that much at all. And just a few days later went absolutely nuts. Now, the covering started back up here. We're talking about a price of like an average of like $4.50. That's over a 300% loss. Now, why does anybody else think that shorts would be covering at a time like this when they're so far under on their position and it finally looks like the bottom is falling out? Like, what does everybody think is the cause for that? It's because there's something going on. Somebody actually is reading the writing on the wall and they know that something is about to happen. I've talked about this before on Jason Pollan's stream, that there's speculation that Ethereum was playing both sides of it. Now, I can't prove this. The only reason I can't prove this is because there's no short reporting data in the market, which is something that we really desperately need. But regardless, there's no way for anybody to know until we get that kind of short reporting data. But it falls in line with Ethereum as a hedge fund's previous plays. They've gone in on many biotech stocks, and they do this pretty consistently where they'll jump in very early on some newcomer, like some biotech play. They'll buy up their stock, take a majority shareholding, and they use their control over it in order to maintain a majority position and drive the company and make decisions on where they want it to go. They make it valuable. They do go long on these companies with the understanding that they want these companies to do well. But when they're able to, they play both sides of their stock so that they're able to acquire more money on the side and gain more control. So a company like Ethereum benefits most when they're able to own more stock no matter how low the price goes. So in order to do that, they have access to algorithms too. They pay quantitative uh, quantitative analysts and these stock market bot developers, these algorithmic developers, to create these systems which are able to move the price. And with a low float stock like this, it's very easy to do because there's so little volume in it. There's so few shares in the market to trade. You can push it around really easily. And just looking back at the history of Progenity, this is not even their IPO. They IPO'd at $15, but in the span of just 1 year, look at how far they fell from October. they were trading at an average price of around 9.50, and they were driven all the way down to 86 cents or 68 cents at the lowest. It's just they make their money by getting the majority of the stock so that they can control the company and make decisions that they believe are best for their own personal interests. I don't really think they personally give a rip about what the company is worth or what it's doing for the world or anything like that. I think they are strictly focused on making money and securing their retirement. And that being said, they acquired a 50% or actually a 60% holding by the time it had fallen below $1. And they finally let go of some of that during this dilution that occurred back here, and then suddenly the shorts went through the roof. I find it very interesting that on this particular day, this is when the first dilution happened, or rather the news of it happened, that that suddenly an 8 million share position got dumped into the market at market price. It drove the price obscenely low out of nowhere, and that happened 5 minutes before the announcement actually occurred. The announcement came a few minutes after the top of the hour, but at exactly the top of the hour is when some algorithmic trade took place and then slammed the price down from, I believe it was around, the high of $2.20, and it slammed it all the way down to $1.60, something like that. And the only entity that had enough shares available to do something like that is Ethereum. That's the only company that actually had that many shares available. It was over 8 million shares in a single trade. Even if somebody had intended to short Progenity, they wouldn't have been able to borrow that many shares in a single trade unless they had been accumulating them ahead of time. And it's interesting that in the next 13F filing that Ethereum had submitted, they gave up around 9 million shares and fell from a 61% majority position down to a 51%. So they still kept their majority position, but I think that their intention here was ahead of this dilution announcement. They expected the price to crater again as soon as it was showing some life, and they were going to make retail hold the bag. So it only makes sense to me that Ethereum was playing both sides of this game, because they were the only ones that had the inventory of shares that would have been able to do it. And if that's the case, then it makes sense that they would short the heck out of the company, drive the price down, and then scoop up more shares sub $1, because it went from 80 cents to $2.20 in just 2 months, and that's a huge run. So it makes sense for a hedge fund to do something like that. So that explains to me at least their rationale, if that was what they were doing, and it makes sense. But since the price didn't fall, it looked like it was going to fall, but then it just took off instead, because either retail bought enough of it or because some other hedge fund got in the middle of it. And so far, we haven't seen any 13F filings that show anybody else buying a huge amount of stock in single trades, at least. It doesn't seem to me that there's enough hedge funds playing with Progenity that they would be moving this stock at this rate. But it would make sense if brokers were forced to take a major inventory increase of Progenity because retail was buying up a bunch of the stock. So something to keep in mind about brokerages: every time you buy something through a brokerage, the broker has to maintain a certain inventory of shares that they hold on their books. We are the registered owners of our shares as retail investors, but we don't actually hold them, and the broker is the one who holds them. So for every person that the brokerage is trading on behalf of, that they're brokering the trades for, then they have to take into account how many shares their customers own, and then they have to go out and buy those shares and clear those with the clearing houses, and then maintain an inventory of those shares accordingly. And those transactions tend to take place in major sweeps. They take place all at once, especially if there's a deadline. And they'll usually do that through dark pool trades, which help keep the price from moving, but it doesn't stop it completely, especially if there's a supply crisis. And if there's a supply crisis, which with Progenity, that is almost certainly the case, with the amount of volume that we saw that came in, I mean, just this day alone was 204 million shares traded. That was at that time, 1.8 times the float. I want to say would have been like the float would have been somewhere around 114, 120 million. So anyway, that's all that makes that's what makes sense to me, that Ethereum was playing this game, that they were shorting the other side of it, and that they thought that they could get more shares by shorting and selling their stock at the same time, and then scooping up more shares at a discount, and then retail stepped in, got in the middle of it, really screwed up their algorithm, and then the price just got away from them. And they thought that they could keep it under control, but they quickly gave up. Because if you put this on a timeline next to AMC, Progenity had this huge run with a major amount of shorting that just immediately has now died off. And what's interesting here is that Progenity is being, if it is being shorted by Ethereum, they're being shorted by an insider, someone who already knows what's going to happen. And that's why this moment, why this major short covering event is taking place now. Because Ethereum's an insider. Their founder sits on the board of directors for Progenity. They know everything that's going to happen before it happens. They know every conversation that they're having in every meeting with their executive board. There's no way that they don't know something is coming around. And I predicted exactly this level of $3.20 based on the technicals, which I can go back to Webull and show you one more time. But in any case, the reason why I point this out is because the only firm that it makes sense to be shorting Progenity by this significant of an amount would be Ethereum. They're the only ones who would be willing to do it, knowing exactly what's happening, when it's going to happen, when major announcements are going to come, and when major dilutions are going to come. And it's fascinating to me that they choose immediately after the news of a dilution to cover. So, long story short, Ethereum is now leaving their position, at least in my opinion. Not that my opinion matters that much, but I do think that if a hedge fund like Ethereum that plays the game the way that they have a dozen times before in the past is continuing to keep with their track record, that this is the game that they're playing, and this time they lost. I'll go and read back. I see I missed a lot of chats, and I'm sorry, guys. I've not done streaming before, so not too much of a. I'm not a very good multitasker. Stevenson D says, "Can you elaborate on Ionis Pharmaceuticals and Pfizer's clinical studies?" So Ionis Pharmaceuticals is I only briefly looked into it, but Ionis is they were creating a drug that was their clinical trials were being funded by Pfizer, and they were working on an oral delivery system as well. The main takeaway from that was that they needed to have a delivery system that was able to bypass the GI tract and allow it to be absorbed into, I think it was the liver. And that was the entire purpose for Progenity coming up with their pill, their oral delivery system. Main reason was that they needed something that would be able to deliver medicine to the liver. And if I'm not mistaken, that's also how Humira works, is it's processed by the liver. But don't quote me on that. I'm not a doctor. I'm not a. I don't specialize in any of this stuff. I just kind of try to keep up as best I can. Um, but the main thing was that Pfizer was in need of an oral delivery system for the medicine that Ionis was developing, and Pfizer had funded significant amounts of research in order to make that possible. TK wants to know about the legal part regarding at the money offerings. How does it work? Does Progenity need to announce before selling, or can they just sell some shares here and there? Okay, so an at the market offering, no, they don't need to. They don't need to disclose when they're selling because they aren't selling it directly. They've put it into the hands of an underwriter and basically a brokerage. So they filed a specific type of at the market offering, um, which the way that it works is they go to a broker, some bank, um, and they tell them, "Hey, we want to offer up some of our shares into the market, but we're not going to we don't want to dictate when they get sold because of insider trading restrictions." So they put it into the hands of the broker, and then they allow the broker full autonomy of how and when they sell the shares and in what amounts. Um, and it's almost never all at once. It usually happens like the brokerage firm basically gets this pool of shares, and then they're like, trade these shares and get rid of them as you see fit, or buy some back, and scalp trades, whatever you do, just make us money. And that's the point. So it's mainly like it's almost like transferring shares from one brokerage to another, except it's going from the company to a broker and telling them, hey, you trade these on our behalf. We're not going to tell you when, how, or why you need to sell. Just do it as you see fit, and that frees up Progenity from any kind of insider trading restrictions. So that's the main reason why they did that. I also strongly suspect that Progenity is well, I mean, the writing's on the wall. They're going to make some big announcements. They've been talking and teasing about partnerships nonstop for, geez, like 2 months now. So it's right around the corner, and this brokerage firm sees that also. So yeah, I would just say that this company is that they've partnered with. It wasn't Wainwright. I think they were the underwriter, but I'd have to look up the firm that they're going with. It's not a well known one, but yeah, that's how that at the market offering works. It's going to be it's just going to be one broker selling on behalf of Progenity. That's all. All right. Oh, this is a good question. So, Fat Guy Lil Coat asks, how is the SI so low, but the utilization is so high? That's an excellent question. So, the main reason why this can happen is because firms are allowed to lend out shares directly to each other. Okay. The utilizations that you see here on Ortex is just based off of what's available under the top prime brokers. So Ortex has access to 80% of prime brokers trading in the international markets. Um, so that's the data that we're seeing here. This is the utilization data from those brokers. So based off of that 80% of all the brokers in existence, 99.8% of their lendable shares are utilized. That does not account for situations where one firm lends shares to another directly through a private agreement, which doesn't have to be disclosed, to lend out shares, such as to a market maker. This can be done personally uh, between firms behind closed doors through either ISDA agreements or even just the market maker approaching a firm directly that has shares and asking them directly, hey, can we come to an agreement on a cost to borrow so that we can borrow your shares and then sell them short into the market. And it's up to that other firm to negotiate that price of what they're willing to lend those for. And they still get to define all their rights and what their what the terms are for revoking those shares or recalling those shares. So, in theory, Ethereum may not have shorted these stocks. They could have just lent out their shares to a private firm. So that's another possibility. If another firm took a short position based off of Ethereum's shares on loan, and Ethereum previously wasn't making those shares available to lend, then that would cause these shares to seemingly come out of nowhere and the utilization to just be still sky high. And despite the shorts being covered, utilization remains high because it's a private agreement. And that kind of tells me that that kind of tells me that that's actually part of what's going on. Here's the really funny thing is that Ethereum can actually they can borrow their own shares to short into the market. So things can get really, really strange and messed up when it comes to shorting stock because you can borrow from anywhere, okay? And the thing is that Ethereum has a lot of tiny little mini Ethereums. they're like little clones of this hedge fund that all report back to the mothership. All of these firms are independent firms, and you'll find a lot of hedge funds do this. A lot of hedge funds have separate trading floors and trading firms that exist in different locations, but they're all independent corporations. And they do this on purpose because they can claim autonomy and independence from each other, but they can still cooperate behind closed doors, and there's no way to really catch them without an investigation. And of course, the SEC is so tied up trying to keep up with all of the fraud that's going on in the markets. Even if they wanted to catch these guys, it's so hard. It's so difficult. So this exact situation actually would be collusion if this is what was taking place, which is why it's also, not exactly wise for me to go around and like say accuse them outright and say this is illegal, you're doing this. I have to be upfront when I say that this is not something that I can prove, and I'm not declaring this as fact. This is just a suspicion that I have that Ethereum is shorting through its smaller funds, and it's distributing its holdings so that it doesn't have to report all of its positions. And this Citadel has this game too. Like for those of you who have been trading AMC and GameStop, Citadel does this too. They have tiny funds that they work with. Merrill Lynch, the great big evil bank of Wall Street, they have smaller funds that operate out of their building. Morgan Stanley, uh, Goldman Sachs, they all have these little hedge funds that all operate under their ISDA license. And that gives them the freedom to make these backdoor, you know, back alley deals all the time, operating in dark pools, but also coming to private contractual agreements to exchange shares for lending and things like that. And that also explains how utilization can continue to climb and climb and climb and climb. And no matter how close you get to 100%, the short interest can just still keep rising somehow. And that's why I understand why people say I don't trust Ortex data. But the thing is Ortex is just giving the data that's reported. And no, that data can never be 100% accurate, but the it can never be 100% accurate, even if the brokers were being 100% truthful, which there's no guarantee that they are. But there's still so many private, closed, behind closed doors deals that happen that there's no way to report the data accurately because there's always shares available to get from somewhere. I recall a story that I had read recently while this was going on. I can't remember the company that this was that this happened to, but there was a company that's share price collapsed down to a sub penny amount, and some guy swung a huge trade for like $50,000 and bought the company. And uh, the very next day after he had gotten his certificates proving that he was the 100% owner of this company, it still opened up on the market and continued trading that day, and traded, tens of thousands of shares in volume. And the guy's like, "What shares? I have them all." So yeah, no matter what anyone does about the market to clean up the data and make it as transparent as possible, there's still going to be all kinds of things about it that we don't understand, that's hidden behind the curtain. What is the most sensible timeline for announcements? I don't actually have a good answer for that. It's really not up to it's really not something that I can speculate on. It's really up to the company itself. Um, but I have a suspicion that they're probably going to make the announcement soon, just because if they're doing this at the market offering, they're going to want to make an announcement soon before those shares get sold. So I would expect it to come at least within the next 30 to 60 days. The at the market offering, just to clarify, can take place over the course of the next year or two. So it could go on for quite a while. And they may still not sell all of those shares that they have allocated. Their goal is to get $90 million. It's not to sell every single share. That's the main thing that they're trying to do. Are they giving up on Progenity completely, or did they just stop shorting? Um, if so, if this is another firm that is just taking its losses, or at least is getting out from the top of their shorts, because if we had some shorts that off of this balloon here that came in late, or maybe some shorts that recently came in, that are all just getting out. I don't think that there's enough shorts that accumulated in this time. It would have to have been some of the ones from all the way back down here, just based off of the averages. Um, but I think that whoever is short, or whoever was short, I should say, by this amount, they're getting out because something is about to happen. I really appreciate all the warm welcomes, everybody. That's really cool. Thank you. Can Ethereum also be the underwriter or broker? No, I'm pretty sure that HC Wainwright is the underwriter for Progenity, so they underwrite all of these deals. Um, they may cooperate, but and Ethereum is also not a broker. They're just a hedge fund. So they don't broker trades. They're just a hedge fund. How is the Wyckoff looking? Let's go take a look at it. Let's go check out the Wyckoff. So I get this question every time. These dashed vertical lines, these are a Fibonacci timeline. Um, with Webull, you can do this with the Fibonacci tools. And the main thing that you want to do with it is you can draw your time. You can draw your time zone on any timeline, but I draw it based on the peak and valley in between major moves. So this was the start of the first run, and then this is the start of the second run. So this is where I started my timeline, and then it just generates the rest of it from there. And based off of that, you'll notice that we've had two runs in this peak here. This was actually the start of the Wyckoff that I've been paying attention to. Okay, the accumulation phase started right around here, where the volume started to get really high. We even had signs that it was taking place as early as back here. This whole run up could have been part of the same accumulation, but this is the timeline that began it, so that's what I've been paying attention to. And then based off of that, it's a very short Wyckoff. Most Wyckoffs take place over long spans of time, like more than a year, sometimes 5 or 10 years. Um, but it's sped up significantly with algorithmic trading. Because actually, this is just a bit of history. Wyckoff, Richard Wyckoff, the man who developed this technical pattern, he actually was trading in the early market back in the early 1900s. I want to say like 1929, like shortly before or shortly after the stock market crash um, that led to the Great Depression. So he was actually very early on. So this is long before computerized trading, and he noticed these patterns taking place. So he was really really smart dude. I'm sure he made a ton of people a ton of money. But anyway, so beginning of the Wyckoff accumulation, we see that we started to get a big lull going on here, and these three peaks are pretty indicative of the Wyckoff accumulation, especially that there's low volume. Okay, there's always low selling volume even when the price is tanking. That's always indicative of accumulation, because a Wyckoff accumulation is the process of accumulating shares, hence the name. So there's a constant process of people buying up more shares when the price is ideal, and then they sell at low volume periods. And the reason why that works is because you see the order book over here, the size of these orders. There's a lot of shares that are on the bid right now. So this would actually be this is a terrible time to attack the bid right now, and that's why I see a bounce coming. So trying to break through these levels is going to be insanely difficult. It's going to be hard. We're talking about it, and despite these levels that we're seeing, I guarantee you that there are more orders that are hidden from these books, because this is just what's on Weeble's books. There's going to be more orders that are hidden, and being used by algorithms, because algorithms don't disclose the trades. They just mark a position, and then as soon as the price hits that level, an algorithm will trigger a market order. So those don't get placed on the order book. These are all limit orders that we're seeing here. And that's all we're seeing is just limit orders. So even with the public limit orders that we see here, this is the massive amount of shares that are available, or that are being bid at these prices. So trying to break through this level at 320 it's going to be hard. Okay, and I don't think it's going to happen. And it lines up perfectly with exactly this dash pattern. This is the lower support line that we formed here. I drew it from our lowest point in Progenity's recent history up to the bottom of this sell-off. Okay, and that has been the support that we've bounced off of consistently now for the third time. This is the third. And right now, with the price quickly approaching this timeline period, this is what I'm actually looking for. And this would be the next timeline on the Fibonacci scale when I would anticipate a run. So this is why I like combining Fibonacci's, because they're so consistently good. Like, they're so on track. Like, we first have this pattern that starts a slow run and then a sell-off, and there's always a peak in the middle of the timeline, and then a lull, and then a peak and a lull. And as soon as the next timeline starts, we start to get a run again, and then we start to sell off. And it doesn't always like get really crazy, but like it happened here too. So it's gonna be a bit of a wait with this one, but I just have a strong suspicion that when these announcements come, it's going to be a slow burn up towards $8, $9, something like that. I'm not saying that that's a price target or anything, but if history continues to if history continues to repeat itself, then I'm expecting the next move to come beginning on the 30th. That's just what the charts are saying. Okay, so I'll address this comment. Somebody says the squeeze is done. I don't think the squeeze is done. And here's why. Look at the open interest that is forming on the 17th of December. There's multiple different types of squeezes, okay? Now, Ethereum, if they were indeed shorting Progenity, then they know what's going on, okay? And they're getting out while they have a chance, all right? They're taking a huge loss. Whoever it is that exited their position, they took a huge loss, more than 300%. They lost their ass. Now, why would you do that when you see the price collapsing like this? You know something. You know something's going to happen. And just because there's not a short squeeze necessarily on the table, we do have still high enough short interest to make it interesting. Like 8% short interest is not small. There's still millions of shares that are sold short, and they've been short for several months now. They're still losing. Yes, we've had some shorts enter, no doubt, from these peaks, but I can almost I can almost guarantee you that at least half the shorts that are in their positions right now are not winning. They're hurting right now. Just based off of the history and the Ortex averages, if any of that data is even remotely accurate, even with a 10% margin of error, shorts are losing massive amounts of money on this stock. So with that remaining 8% of shorts that are still in those positions, we still have, that's 8% short interest of the free float, which is what, 12 million or so shares. It's enough, you know, it's enough to be significant. If the price starts to run again towards $8, it's going to exceed limits. Most of these shorts got into their positions sub $2. They're still underwater. Right now is the best time for them to get out, honestly. So, what level of the fib would I expect it to move to? In the short term, Progenity always breaks the first two Fibonacci levels. That seems to be its trend. Once it breaks the second level, it'll it'll either trade at it or above it very briefly, and then start to retrace again. And it'll hit the first support before it makes another jump. So it'll do a stair step pattern where it'll do 2 steps forward, 1 step down, and these Fibonacci levels have been pretty accurate in the past. Not every single time. No trading strategy is ever totally perfect, but that has been consistently the case. Because with Progenity, it had a Fibonacci level down here, and this I remember very clearly. There were two levels that it broke here, and then it retraced back down to one, and it touched it again and got rejected. But it finally broke through, and it went through all the levels straight up to a 100% gain. So if you were to replay this exact kind of movement on this current Fibonacci that I've drawn here, it would look something like breaking up to about $5.10, and then it would break down to 4.30, and then sometime in the middle of the month might fall down to as far as 360 or 370 before it bounced again and went straight up all the way to the top of this megaphone. That's all speculative. I'm not saying that's what's going to happen, but if you were to replay this entire pattern, then it would that's where it would go to. If you scaled it up to this level, it would end up somewhere in between somewhere between $7.50 or $8.50 by December 17th. Maybe by Christmas. Why would somebody borrow loads of shares and pay a huge fee but then not use them? That's an excellent question too. So a lot of these shares that are on borrow are on borrow by market makers, and that's the reason why. Market makers tend to hold an inventory. Excuse me. Market makers tend to hold an inventory that they'll maintain on a stock that's trading pretty volatilely, and because the stock is trading with high volatility, it's actually cheaper for the market maker to simply borrow the shares rather than buy them in the market and then sell it at a better price in order to fulfill trades. It's easier and cheaper for them to just borrow a large pool of shares and then sell them short in order to fulfill trades, and then wait for the price to come down before they'll buy more. And they'll usually do that in a dark pool in order to cover those trades. Because a market maker's goal at the end of the day is pretty much to maintain a net neutral position. They're not trying to trade one way or the other with the stock. They're not trying to trade with a directional play. They're simply taking the other side of their customers' trades. Um, Sports Nitro. I'm sorry. I can't tell you what to do with your puts. I'm not a financial advisor, so I can't tell you what to do there. Um, what I would do in my shoes, if I was selling puts at that strike, um, honestly, I would not be closing those right now. Um, yeah, I wouldn't close those right now because we're at support right now. Unless I saw signs that Progenity was breaking down, um, and I don't see it breaking down right now. It's at support. It's maintaining a level of support, and it's a strong level of support. So I would not be closing those put contracts if that were my trade. Could the dip be due to exercising warrants? Exercising warrants is usually a bullish sign, um, but yeah, I mean it's possible if somebody's exercised the warrants and then sold the shares immediately into the market. Yeah, that could cause a downtrend. I don't know why you would do that though. That doesn't make any sense. If you spent the money to buy those warrants and then you exercise them, why would you sell them right away? If you're purchasing warrants on a company, it's usually for a long-term trade, and the taxes on that would be absolutely astronomical. So, yeah, I don't know why somebody would do that. You'd pay so much in taxes. You'd lose 30% of your profits. Am I focusing on 12/17 calls or January? Yes, I am currently focusing on the December calls. The Januaries also do look good as well. This chain is starting to build up, and there's a lot of them that were already in the money. Most of these calls were already open. They've been open for the past quarter, so a lot of these that have been in the money for this long are continuing to stay there. I've even got some January calls from back here. Yeah, so I'm pretty happy with those. I'm holding those until expiration. I have no intention of selling those calls. I'm trying to scalp some of these December ones though. Some of the December ones look pretty good. It actually can also be helpful to look at puts and calls both at the same time. Reason why is because you can kind of get an idea where market makers might try to pin the price. Um, One interesting thing that I took note of was the amount of puts that got bought out the money at $3. Unusual Whales was tracking a lot of put contracts being purchased at $3 strike for I think it was actually this Friday. I don't see them here on this chain, but they may have been closed already. Who knows? But I do think that a lot of bears decided to chase this play, and they're trying to scalp some money off of a few puts. But it's just while Progenity is in this consolidation phase slash downtrend. I like I said, I still don't think that it's going to last. But in any case, like I was saying, the perfect price between puts and calls would be around just below $4. If um, if the price stayed below $4, then that would cause the largest number of both calls and puts to expire out the money. So that would be the price that hedge funds would be targeting if they wanted to make the most money off of their basically they sell a put and a call at the same strike price. Um, it's called a short straddle or sorry, that's a short strangle. That's when you sell a call and a put at the same strike price. And your perfect scenario is uh, if the price closed at exactly that strike price, and you would keep the premium from both, which is next to impossible to do. But what market makers end up doing is they try to get the prices close to both of them at the same time, and then they buy to close both of those positions because they're so close to expiration. And if they had sold to open those contracts a long time ago, then they would have made a lot of money in premium based off of theta decay. Little lesson in options trading. What's my take on days to cover? Um, Days to cover is just really, in my opinion, an indicator of volume. It doesn't really tell you. It really doesn't tell you anything as far as like if the shorts are going to cover or can they cover, because all that happens with days to cover is it tells you how long it would take shorts to cover in theory based on the current level of volume. So if the volume just blows through the ceiling, then days to cover drops down to the floor. And if the volume dies off, then days to cover goes through the ceiling. They're inversely related. So, but I don't really consider days to cover to be a particularly useful piece of data. It's kind of like a nice to know, but it's not very important. If that makes sense. I have not heard anything new about a Pfizer partnership. The only thing that we're seeing is that Pfizer has funded a lot of studies. Um, they're putting a lot of money into research and clinical studies that have very close ties to Progenity. And Progenity just brought on somebody who has worked very closely with clinical studies on behalf of Pfizer in the past. Um, so there's a lot of signs. All right, that's what I'll say. There are a lot of signs that the partnership that, or at least one of the partnerships that's going to be announced, is going to be with Pfizer. But that does not confirm anything. It's not guaranteed. I cannot promise anything. I don't know anything, and even if I did, that would be insider information, so I couldn't tell anybody. But the signs are there. These clinical studies that have Pfizer written all over them, funded by Pfizer, funded by Pfizer, funded by Pfizer. It's all over all of these clinical studies that are involved with Progenity, and Progenity's been partnering with other firms that have been partnering with Pfizer and receiving funding from Pfizer. It's not a coincidence, okay? There's no such thing as a coincidence in the stock market, okay? Are we still on the FTD threshold security list? Good question. And I'm actually, I haven't checked in the past few days. Just because it stops being as significant after the 13th day on the threshold list. But it is good to know if we are still on the threshold list. Progenity is still on the threshold list as of last Friday. We'll know if it's still on it today, after post market close. So that'll be a little while from now. Let's take a look at the 15-minute here. Yeah, perfect downtrend, right? This is how I know it's an algorithm that's doing this. This is how I know it's an algorithm, because the trades the movement is too consistently perfect, and the volume is so low. Look at how low the volume is. Less than 1 million traded on each candle. But as soon as you get a green candle, there's over 6 million. Yeah. A green candle will be, more than 5 million traded. But all these red candles, it's sub 1 million. That's how you know it's an algorithm doing this, okay? Because when you're trading the stock market with an algorithm, they're watching the amount of shares that are on the books, right? So you have these computers that are looking at people who are saying, okay, if it drops any lower than this, then I'm going to sell X amount of shares. So the algorithm sees how many other limit orders are between it, or the current price, and that level, if it wants to scoop up those shares. So the algorithm shorts its way through all the small amounts of orders that are on the books, and it causes the price to dip below someone's levels. As soon as it hits that limit level, the algorithm puts in a buy order, a big market buy order, and it buys a huge chunk, and it takes all those shares back and then covers the position. So when there's low volume, when there's a very little amount of volume being traded on a stock, it's very easy to drive the price down. The reason is because the price is based on what people are agreeing to buy and sell at. That's the national best bid and offer. When somebody is agreeing on a price, that's when the bid and the ask meet each other. When they both agree on the same price, that's what the price is currently at. See, somebody agreed to 322, that's what it's trading at. As soon as somebody agrees to 323, that's what the price will be. That's how the market price is dictated. If somebody goes in and says, I will buy every single share from 321 all the way down to 312, and they bought every single one of these shares, then that would cause the price to go all the way down to 312. And that's how the algorithms work. That's how the stock market price is dictated. But that's how the algorithms are driving the price down. Because if there's not a lot of volume, it means not a lot of people are willing to buy and sell at the same time. And most volume in the market comes from buyers. Most volume comes from buyers. So when you have a situation where algorithms are able to buy up in mass all of these shares, it drives the price down and then they can take up another large position as soon as somebody puts an order to sell their shares uh, in order to get out of the position because they think it's collapsing. It causes panic, which begets panic. You're watching human psychology play out in real time every time you look at these order books. The price dances around all over the place, but the order books tell you the order books tell you the mentality of where everybody is at and what they're thinking. Okay, I can see somebody's already going to make me kick them. MC, what's your problem, dude? Like, why? I'm gonna leave you in here for just a minute before I kick you out of my stream. But I really want to know what your problem is with everybody that's trading this currently that wants to make this play. Because I know who you are. I know who you are on Twitter too. I see you constantly bashing me on Twitter. You're bashing everybody else who's trading in Progenity. So why the vendetta? I'm just reporting information that I am looking at based on what I see. Okay? I see how Progenity has been performing. I see how the company is doing. I am looking at numbers and data, and I am conveying that information to everybody who is interested in knowing. Why do you have a problem with that? I really want to hear. I really want to actually understand your thoughts. Because I'll argue with somebody all day long. I don't care if you think that I'm wrong. That's fine. Nothing. All right. All right. Fine. Yeah, I don't care if you want to tell me that I'm wrong, but at least tell me why you think that I'm wrong. They actually come to me with an argument. Don't just come in here and be like, hedge funds have other plays. No shit. What else is new? I don't care. I'm looking at this company objectively as a biotech newcomer, and it is a good company. They're building novel technology that's going to change the lives of millions of people. They're going to be able to provide a delivery system that's able to bypass the GI tract in order to make it delivered, in order to deliver life saving medicine for any number of different applications. Like Humira is not even the only one. And while I've been told that it's not already being applied to insulin, it can in theory be applied to insulin because this system is capable of delivering medicine that has to be absorbed directly into the liver and can't survive through the stomach, which is part of the whole point. Now, that's extremely cool technology. Like, isn't that just cool? Think about if you didn't have to take a shot for a vaccine, if you didn't have to take a shot in order to receive treatment for Crohn's disease or ulcerative colitis. That's the direct application for the for their current delivery system. Those are the things that they're capable of doing. And think about what that would do for the mindset of the average American who's terrified of needles and thinks they're going to be microchipped or something. I'll be perfectly blunt. I think everybody is an idiot if they think they're going to be microchipped with a with a 5-gauge needle or whatever. But anyway, the technology that Progenity is developing is insanely cool. It's just cool. It can be applied to so many different areas of internal medicine, and it would even be able to be applied to, think of like surgical nanobots, which is something that we do actually have, by the way. Surgical nanobots are able to be deployed in the body and be able to, stitch together fissures and internal injuries that we have. Doctors and biomedical engineers have been working on this technology for a long period of time. Imagine if you had a pill that was able to just go ahead and deliver that directly to them, to that area, and deploy surgical nanobots. Like, we're living in the future at this point. We're not even talking in the realm of fantasy anymore. This is the future. Now, what about a company that's the first one to develop something that's plausible at delivering this kind of technology into the field of internal medicine? What about that is bad? And why should I be a pariah just because I really like this company? Get off my ass. Just get out. I don't really, if you don't have a legitimate argument, if you don't have some evidence to back up why this is a bad play, then just leave me alone and go do something with your day. This is what I want to do with my time. Piss off and go do something useful with your life, okay? You have your own life to live. Why are you wasting time on the internet yelling at a guy through social media? That's just a waste of a life. Go do something useful. Anyway, does somebody else have a question that's... I'd be happy to answer any other questions. Let's see. I notice I see a lot of names that I recognize from Jason's Discord. I should probably get on a call with him at some point. Somnium, yes, I do wish that I could predict the future. I've been waiting for Senseonics to get its FDA approval for, God, I don't even know how long now. It's been entirely too long. It's been so long overdue. Let's actually go ahead and look at Senseonics. I'm very curious about it. So they just hit their low point again. My portfolio is extremely heavily over leveraged to Senseonics. It's getting slammed right now, which I'm sure that means that somebody knows something, so they're shorting it ahead of time so that they can go scoop up some more shares. Let's see. It's breaking down below this bull pennant. Yeah, it's probably a good time to go buy some, honestly. I know that everybody looks at this like, how in the hell is that a good time to buy it? It's because the price is good. $3.20 is undervalued as hell. Honestly, after they had gotten their product approved for their 90-day, I don't know how they were trading below $1. I wish I had known about them a long time ago. Like, imagine if I could have gotten into the stock market and started been paying closer attention to some of these other plays before January. Yeah, I probably would have made a killing on GameStop, but like, geez, 35 cents for this stock was cheap. Progenity and SENS are the same price. Yeah, that is pretty funny. Senseonics is its own type of play. It was a short squeeze candidate for a while, but it's the shorts have since kind of walked away from it. I haven't actually looked at the short interest for Senseonics yet. I'll go ahead and show you guys what I'm looking at here. Days to cover is lifting because the volume's dropping out. So yeah, this is actually a perfect example of a Wyckoff pattern as well with Senseonics. So the accumulation, it's funny how often these these types of plays with Wyckoff accumulation patterns, they look very similar to each other. They look very similar to bullish pennants, and they tend to form bullish pennants because you'll have these low volume periods that suddenly a surge of volume will come in and lift the price up extremely high. Usually, the algorithm is the one that's acquiring all of these shares early on, but then retail will jump in, and other funds will chase, and then FOMO kicks in, and that causes these massive volume spikes, or at least that's what I suspect it is. Because ideally, an algorithm that's accumulating shares doesn't want to let on that it knows that the price is going to go up. They're just trying to accumulate shares before that happens. But if they need to do it quickly, then they can quickly cause the price to rise. And then as soon as that happens, everybody's market screeners go off and they go, ooh, this stock's running. Jump in on that. And then, the FOMO kicks in, and it just, a bull run begets a bull run. And then finally, it'll sell off. Senseonics has been doing this Wyckoff pattern ever since January, or February, actually, I should say. This is when the short interest was at its peak. I was really expecting a short squeeze back then. I really thought that it was going to take off then, because little back history. I did tons of Reddit DD. There's actually a Senseonics Reddit series, a 6-part Reddit DD series on Senseonics that I wrote. And I was predicting a gamma squeeze was going to take place. I was really close with the June prediction, and I did make a lot of money here. But the July gamma ramp was massive, and it just kind of fell out from underneath it. And that was because there was an expectation that the FDA approval was going to come, and then the FDA said, nope, we're ignoring you forever. That's been my biggest issue with Senseonics, is that there's no good predictor for when the FDA is finally going to pull its head out of its ass and actually continue to do their normal job as they should have been. But anyway, let's go ahead and draw some Weeble charts and see what we can do with Senseonics. Since we've drawn out this pattern here, this is the daily. Okay. Let's go ahead and draw this out here. Yep, that looks about right. Change this up a little bit. Okay. So that's our point of no return support line. This is the moment where Senseonics, if it crosses too far below this, then that would be a extremely bearish sign that the price is collapsing, and it would fall back down to this $1.65 level. And I want to be I want to be as clear as I possibly can. It may touch this line. It might drop a little bit below it because these lines aren't perfectly drawn. But we're talking about if it trades like far below this line and it drags the VWAP for several days below this level, then that would be the bearish sign that I'm talking about. Okay. So these levels are never perfect. But this would be the point of no return. So if in the next few days, Senseonics, I would say if in the next week it falls below $3, then that's the warning sign. And if it falls below 280 before Christmas, then that's a bearish signal. It's important not to get into a rush with these things because everybody is so hyped on instant gratification after the GameStop squeeze and stuff like that that they want the world to just turn on their schedule. Can't be that way. It just it doesn't work, and it puts you in such a terrible emotional state that you start making terrible decisions. And even I've done this, but that's why I keep saying patience is key. Ever since I've been repeating that mantra to myself, I've done way better playing these stocks. Just be patient. Don't over leverage yourself. Don't play with more money than you're willing to lose, and don't put yourself into a position that you cannot recover from. Joe Miami wants to know if the investor meeting tomorrow PROG has potential investor meetings. Could those investors buy up those 90 million worth of stock at, let's say, $4.50 or higher? No, because, well, I mean, they could, but they'd be doing it through the market. So those shares are being offered by a broker that's being done third party, and that's outside of Progenity's control now. They've given those shares over to the control of the broker, and the broker is now dealing those shares on their behalf. Progenity gets no say in how or when those are distributed. But not a dumb question. It's a very confusing mess. There's nothing clear cut about the market. So please, there are no dumb questions. The market's extremely confusing. Do I think that Progenity is in a Wyckoff phase D? I do think that, yes. I think that we are. I may have been early on the spring, but I don't think I was. I think I was. I think I was spot on with that prediction. I think this is the spring. Sorry, I had to cough. I hope I didn't blow out everybody's ears. So I'll pull up a Wyckoff example here. Everybody can get a little bit of background on Wyckoff. Yeah. So Richard Wyckoff, the namesake of the pattern. Look this guy up. Really intelligent dude. This guy actually wrote most of the books on trading that everybody references, going back as to the earliest days of the stock market. He was there from the beginning. Okay. So here's the accumulation. Now, this is a rough pattern. It's never perfectly exact, okay? But with the accumulations that we're talking about, we have this massive fallout for a stock, okay? That's where it always starts. We're looking for preliminary support as the sign of where the stock is at a happy place, okay? Now, these patterns can come at any time frame. It can happen anywhere. It can happen across months, it can happen across days, it can happen across years. What we've been seeing in the markets is that these play out over the course of several months to a year. It's been happening in AMC, it's been happening with Progenity, it's been happening with Senseonics. So the preliminary support is where we know that the stock is comfortable being at. And this is what I looked for in SPRT, as a matter of fact. When I saw SPRT was set up for a squeeze, I set my preliminary support level at $18. This is what I thought that SPRT would have gone to at its maximum potential. And I was clearly wrong about that because I didn't actually understand the Wyckoff as well as I do now. But SPRT went up to $59, which was crazy. But I saw preliminary support at $18, and I based that off of where the stock had stopped falling for a significant period of time in its past history. And it had a lot of history since it was a .com stock. This is a stock that was around since the 90s, and it fell out when the bubble popped. So its preliminary support in recent period, at its most recent period, was around $18. So that's what I looked for, and this chart would have been like over the course of like 10 years. So then we finally hit the climax of the selling pressure around I think the stock hit like $1. So Progenity is a little bit harder to predict because Progenity isn't a very aged stock. It IPO'd back in 2020. So after the sell-off hits its worst point or the selling climax, then it'll rally immediately. And this is like what we call the bounce when it bounces up extremely high. That's the natural bounce when everybody picks up all those shares because it's like such a tremendous discount. And that doesn't tend to last very long. There's a secondary test, and then it'll trade in these U patterns, and it can do several of them. But there's a consistent U pattern where it will test the major resistance lines that are approaching the preliminary support. Oh, sorry guys, I have to pause here for a second to take a call. Okay. Sorry about the interruption there. So after we so I think I left off at the secondary test of the selling side, and we moved into phase B. So phase B is the oscillation. This is like a long consolidation phase, is what you can think of it as. And you'll find that the stock will bounce between very significant, like it'll swing widely. I think that probably either AMC or Senseonics would be the best examples of this. Go ahead and switch to Webull here for a quick second. So this would have been the this would have been the this would have been the high, and then this would have been the preliminary support level. We hit this level for AMC around 55, and then there was a sell-off. That this was the this would have been the selling climax, or I suppose you could actually call this one out as the selling climax, and then this was the secondary test. I think that's a lot closer. Yeah. So in any case, the preliminary support that I was paying attention to here was after it came off of this squeeze, and is this really volatile. So none of these levels are going to be perfect. But as you see that AMC hit its bottoms down here, it came back up to retest the resistance that it showed here at the $50 to $55 range, and we traded this level several times. We had actually briefly tested it back here, I want to say. We were approaching $50 pretty recently. So AMC is actually following a Wyckoff pattern as well. And if this is a good indicator, then the spring would be coming around between now and late December. This phase of volatility is falling out, and the volume is dropped out through the floor. There's other signs that, excuse me. There's other signs that the stock is due for a rebound here for its next leg up, because the price oscillation has gotten narrower and narrower and narrower, which is indicative of the bullish triangles or the bullish pennants that you see technical traders frequently reference. We've already crossed past this. Go ahead and redraw this a little bit. It's been a while since I've touched my AMC chart. I honestly stopped paying attention to AMC. I just left my shares there and I held and haven't done anything with them. Okay. Well, we broke through that level, so I'm going to leave that there. Okay. So I'd expect to see a bounce from AMC, and then it would be entering into that phase D. And it would be happening right around the middle of the month. So December 17th, options expiration, right around the perfect time. And just as a little bit of additional confirmation, let's actually go look at those December options chains. It's a lot. There's a lot, actually. This is a rather significant ramp. Several thousand calls on each of these. I'm willing to bet that this is growing as well. Compared to the weeklies, like this week has a ton of calls on the chain also. I wouldn't buy them, but these December 17ths are looking really nice. Week of Christmas is never a good week to trade. People pull out their money out of the market ahead of Christmas. December 17th is probably going to be the last time that we see some major moves to the upside for a little while until next year. In any case, that's an example of AMC's Wyckoff. Um, it did the same. It did the same thing previously when it had its run up to when it had its run up into January. That was its peak, and then it had a major sell off. This would have been the selling climax. It came back up to test its preliminary support, which it stopped right around here in this $9 to $12 range. It tried to touch it again and then sold off again. It broke above it briefly, which is not typical of a Wyckoff. It does not tend to break these resistances, but it did break it, and it sold off again and consolidated long into May. And finally, when it tested that level one last time, it had to test it a total of 4 times before it finally broke. Um, this third test of the resistance here is when it fell down. It fell down sharply, like it got scary for a while. I remember this. When it hit $14 and it crashed down here, and we tested like $12, or it was like 11.50 or something like that. I remember I just bought a ton of stupid out the money calls because I saw this Wyckoff, and that's when I bought SENS around this time too. I bought a ton of SENS calls at the same time, and they both squeezed together. AMC went first, and then I took a bunch of that money out of calls, and I threw more into Senseonics, and then SENS squeezed. So these Wyckoffs do work. They're legitimately very, very accurate. But trying to determine where you are is the hard part. Because it's really, until it develops and plays out completely, you're never really sure. Someone wants to know what the next support level below 320 is. The next support level below 320, if I were to draw a horizontal, would be at 280. At 280, 285. Everybody who's saying Prog's bleeding, just relax, okay? Just calm down. Just calm down. I don't know how to be more explicit when I say that you're trading against computers that prey on fear. Panicking is exactly the response that they're trying to get out of you. As soon as you give into that panic is exactly when things start to fall apart. Just don't panic. You have to look at this stuff objectively. The things that we know are that Progenity has secured its funds. They have enough money to last for another year. They are putting some money out on the market to offer. It's being handled by a third party broker. It will secure approximately $90 million for them once it's done. They have 3 new products that are ready to go to market. One of them, their preeclampsia test, the Precludia, is already getting ready to go to market imminently. And that's going to net them. I'd have to actually look at what I'd have to do all the calculations between what they're pricing those products at. But it's going to be enough of a business that they no longer have to make any kind of offerings in order to survive. I can at least be certain of that. And then once the delivery systems, the oral delivery systems finally hit the market and those partnerships with whoever it is announced, Pfizer, then the stock will rebound. If anything, I wish I had a few more dollars on hand so that I could buy a few more. I bought my dip already today. I already set my levels. I set my limit orders. This is uh, this is everything that I was able to accumulate. And just like before, another 10-15% sell off. I don't I'm not even remotely phased by it. Who said I was showing throwing shade at Jason? I love talking to Jason. When did I throw shade at Jason? What did I say? Well, anyway. Yeah, everybody that's freaking out about Progenity dropping 50% from its all-time high, or its recent high, I should say. This is what it does. It did the same thing how many times in a row? This is the most significant that it's fallen in a short period of time, true, but like it did the exact same thing right in the beginning. It went from 86 cents all the way up to $2.20. That's almost a uh, that's almost a 300% gain. And then it fell all the way back down to a buck 20. I did not sell any of my shares then. I was still holding then. I ended up accumulating some more. Day traded some calls, made a little bit more money, and then we popped again. And isn't it funny how it always happens on these timelines? Every single timeline that we see, there's a green candle, a really great big green candle. Just 2 days. Just 2 days, all right? Give it 2 days and calm down. Did I buy any calls? Yes, I bought some calls. I bought some $3 call. I bought $3 calls. When I'm playing this close to expiration, I'm buying in the money calls. I don't I don't play the YOLO your life savings game. If it's going to run before the third, not saying that it will, I think we'll get a nice bounce. Um, but I think that the most we'd see out of it would be like 380 $4 in the short term. It's what happens after that that I'm excited for. Because after the partnership announcements are actually disclosed and they start naming names, then they're going to start talking about other things like, oh, we're funding these products and we're going to fund manufacturing and we're going to be funding. We've got all these new people that are on our board and we've got all these new VPs who are going to oversee our product entry and marketing and blah blah blah. All of that stuff is going to come one after the other. This Adi Mohanty, the new CEO of Progenity, this guy's worked in biotech for going on 20 years now as a uh, at least at the director level, but now at an executive level. And the guy sits on the board for um, several biotech companies, and he has a history of helping assist with market entry. Getting products out to market is the most important thing for Progenity right now. If they have a product, which now they do, then getting out to the market, manufacturing these things, doing mass manufacturing, and getting their services out to everybody is going to be the next critical piece. So we just have to be patient and let them make these disclosures on their own time. Anthony Wilson, are you going to be a problem? Am I going to have to put you in timeout? I did not say that. I'm not interested in monetizing my channel because I don't want to. That has nothing to do that has nothing to do with anything. Oh god. I never threw shade at Jason. I enjoy talking to Jason every single time I do. You're really throwing a lot of speculation into what I said. I'm just doing these videos because I feel like I have something to say, not because I need to make money. Jason's making money. Why would I have a problem with that? It doesn't make any sense. I work a full-time job. I had to take a call just a few minutes ago, as you heard, as a matter of fact. And as a matter of fact, I should probably get back to that here pretty soon. So I'll probably end the stream here in a few minutes. You guys can hop over and join Jason for Power Hour. But yeah, I mainly just wanted to come back in here and like point out these support levels here, because we're at the support levels. 320 is what I predicted. We fell a couple cents below it, but I'd say that's pretty close. It's close enough for horseshoes and hand grenades. And now watch from here. Pretty soon, I think in a couple weeks we'll be seeing $5 again. Jason owes me some Chick-fil-A. I haven't had Chick-fil-A in forever. Now I want a chicken sandwich. I'm on a diet though. I can't do that. It's not good for you. Security lendings has increased each day since the 18th, etc. Thoughts on that? If you are referring to, if this is the way, if you are referring to the margin debt ceiling or the margin debt claiming, I did take a look at that, and yeah, my thoughts on that are it's 2008 2.0. I think that the market is exceedingly over leveraged and is such danger of a complete collapse. I think the housing market is about to collapse. I have been talking about that since March of this year specifically. I sold my first home last year in September during the height of the COVID crisis, and I sold my home for almost twice what it was worth. I've been living in an apartment since, just waiting, biding my time. If I'm sorry if you recently bought a home at these prices, I really am, because I don't think their value is going to be sustained. But you'll be glad that you're in a home. The important thing is having the home, not so much the buying it. I honestly miss it more than anything. I wish I wish I still had my house. I don't mind that it was old and breaking down. I would rather live in a house than an apartment any day. Should people who bought around $5 feel okay? I think so. I bought some more at $5. I bought some more at $4.50. When we hit that $6.20 peak, I sold a lot of the out the money calls that I was holding on to. Everything that was expiring in November, I sold at the peak there. and that's just because I day trade. Like I swing trade these things. So when there's volatility like that, I'll sell those, and then I'll wait for a downtrend, and then buy more calls and wait once the volatility levels out. But yeah, I bought stuff for $5. I've got calls for more than $5 that are expiring in December and January. So yeah, I feel great about $5 in the near term. I'm not even sweating it. Security lendings on Ortex data on PROG, and that it has increased each day since the 18th. Oh, okay. I'll go back to Ortex. I'll take a look at that, and then I'm gonna have to close the stream here because I have to get back to work. Go back to this. Show me Progenity. Down 400,000 with Progenity. Damn. You must have, somebody must have put in a lot of money into Progenity to be down $400,000. It hasn't even fallen that far, man. Honestly, that's like a late comer. That's a late comer with way more money. Way more money than I can fathom. Okay. So security lending has been rising since the 18th. I'm assuming you mean the 18th of November. Oh, I see what you're talking about. Yeah, that is. Well, I mean, that's part of the covering. I'm willing to bet you that a ton of shorts are about to enter today. I guarantee you that at the end of the day today, when the report is goes through, there's going to be a whole bunch of shorts that entered their positions today. The bottom has been falling out here, and I am so certain that this is like a bear trap about to be sprung. Because bears see this kind of price action, and they get so excited. They get so hungry and so greedy. And right now, Progenity is at a critical level of support right now. This is the shorts equivalent to chasing the top. So when the price is this low and you see and you see shorts jumping on top of the stock and dogpiling on it, it might go like this a bit tomorrow as well. Like we might get a pop again in the morning, just like kind of a sympathy pop, um, or maybe pre-market we might open up and then gap back down. Um, Tomorrow I'm not necessarily expecting it to be green, maybe a little bit green, but I'd probably be looking for more consolidation, to be honest with you. Um, but I don't think it's going to drop much lower than this. We are going to be on SSR, so the SSR rule is going to be in effect just because we've fallen down below more than 10% since our previous close. Um, with the lending volume going this high this fast, and you'll see you look at the look at the past trend. Yeah, look at the past trend. When you see the lending volume going like this and it gets super high, like 10 trading days later, that's when the FTDs really hit. And the same pattern followed through here. Security lending volume went through the roof, and then the FTDs hit. And this was an options expiration week right here. So yeah, lots of options expired in the money, and then yep, 15 days later, or about 10 trading days. And then we had another FTD spike. And we've been on the threshold security list for more than, I think we're past 30 days at this point, but I'm not positive of that. I think I wrote it down somewhere what day we started on the threshold list, but anyway, um, I'm afraid that that's all about all I have time for. I'm gonna have to cut the stream here. But thanks for jumping in and listening in, guys. I appreciate that, and hopefully this kind of, I don't know, assuages some fears, gives you a little bit more conviction back. I'm not gonna say that there's no reason to be scared because it is scary price action, but this is what computers do. They're really good at it, and they make money for a reason. The price is just going to do whatever it do until it's done. And while it is low, I would be buying shares if I had some more cash to buy it with. Unfortunately, I'm a bit tapped out, but I'm really excited for what's coming in the next few weeks. So I hope you are too. Keep an eye out. Don't sleep on this one, and have a good one.